Good morning. Welcome to Stock Market Today for Friday, August 28th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the great content for this show. Also give you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. So U.S. equities were mostly higher on Thursday. S&P 500 was up for a sixth consecutive session, while the Nasdaq did break a 5-day winning streak. At the sector level, it was financials, REITs, and healthcare that led the market higher. Comm services, discretionary, and materials traded lower on the day. Treasuries were weaker at the long end of the curve, leading to a big curve steepening. The dollar was better against the yen, little changed against the euro. Gold was down 1%. WTI crude down 80 basis points. And as we kick things off on the final trading day of the week, S&P futures are up 20 basis points in Friday morning trading. U.S. equities are on track for another week of gains with leadership from growth and momentum. Asian markets were mixed overnight, with China up 1.5%, while Japan was down a like amount. European markets are mostly lower. Treasuries were mixed, with the curve steepening once again. The dollar is under pressure on the major crosses, in particular against the yen. Gold is up 1.8%. WTI crude is up 20 basis points to kick it off on a Friday that starts with the S&P 500 at record levels after logging a sixth consecutive day of gains. Breakout to the upside, bull case playing out above the moving averages, 50 and 200. Support 3,300 to 3,400, which we raised this week. 3,250 below that, lining up with the 50-day moving average. On the resistance side, no price-based resistance, as the market is trading at record highs. Now, we are overbought in the near term, as we have been for most of this week. 13-period CCI, 3-day moving average of that metric in overbought territory. So what does that mean? It means we are overbought within the context of an uptrend. Right? Does that mean you run out and sell everything? Probably not. Depends on your time frame, really. To me, what that means is you become more selective with your bullish ideas, your entries. Right? You don't always have to be trading. Right? Sometimes, if your entry is not there, if your setup's not there, you sit with your positions. You make sure your risk management process is in place, and you ride the wave. Chaikin money flow is strongly bullish, as we've been discussing. So indicators confirming the trend. Market at all-time highs. Bull case playing out, led by our favorite theme, growth and momentum. Let's hit our market in a minute now. What are we writing about in the note today? Well, we touched on it a bit, 6 in a row for the SPY, but the Qs did break a 5-day winning streak yesterday as they closed lower. Long bonds hit following Chairman Powell's speech. The relative trend in semiconductors is under pressure, and that does have our attention. Growth over value breaks out, but is extended once again, and futures point to a mixed open here today. From an indices standpoint, the Dow up 59 basis points, power bar 12-0, bulls to bears. S&P 500 tax on 22 bips, 163 to 56, bulls to bears on that metric. Nasdaq, as we said, was down on the day, but still solid, 35-4, bulls to bears. Small caps were an inline performer, 670 to 286, bulls to bears on that metric. Bonds, big downtick, especially at the long end following Chairman Powell's speech at the virtual Jackson Hole Summit yesterday. And that backup in yields helps the financials, in particular the banks on the day. 24-5, bulls to bears in the XLF after that group added 1.7% yesterday. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Hit our stock of the day now. Aaron's Inc., specialty retailer, and it's amazing to me. I highlight this in my note today, that the retailers, even on an equally weighted basis, so adjusting for Amazon, solid, trading near 52-week highs, defying the bearish logic. Aaron's has a bullish Chaikin Power Gauge rating, is in a strong trend above the rising long-term trend line, and specialty retail from a power bar perspective is strong. So the industry group gets a strong reading here. So what I see is we've made the turn, consolidating after a strong move with support in the $50 to $55 range. We have a bullish stock that has seen the intensity of its outperformance pick up of late. That's an encouraging sign. It is now oversold within the context of this uptrend with persistently bullish money flow since the end of April, beginning of May. To me, that's an interesting setup. When we talk about setups, given the market's extended position, this one looks like an interesting setup to me. I'm highlighting it in my note today for clients, calling it out here for you on the show. If you're looking for potential ideas that are setting up, that are away from the traditional crowded trades, you might want to take a look at AAN, Aaron's Inc., closed at 56.92, up 85 basis points on the day yesterday. Let's hit our sector tracker now. Movement in the major sectors over the last 5 days. Tech at the top of the list, followed by comm services. So no real change there with those two jockeying for position over the past few days, number 1 and 2. That solid move yesterday in the fins bumps it up to the number 3 spot. And I do think you have to start to focus on that area. I'm not saying get involved. I'm saying pay attention to it. Why? Well, because if this curve steepening trade continues to play out, that should be a tailwind for the financials and in particular the banks, which we'll look at in a little while. And I'm saying, number 1, be very selective. Number 2 is the group's not there yet, but we'll take a look at that in a moment. Middle of the road, discretionary industrial staples and materials all higher. REITs and healthcare higher over the past 5 days, but lagging. Utilities under pressure, as are the energy stocks once again at the bottom of the list, lower over the past 5 days for those two groups. So let's dive in now to the industry in focus, which is bank services. And there's no two ways about it. It's been a disaster over the past 6 months, lagging the S&P 500 by nearly 24%. Power bar ratio is strong, 36-12, bulls to bears there. But it's currently ranked number 11 of 21 subsectors that we trace that's based on this power bar ratio, and it has moved up 2 slots over the past week of trading. Now, some names that might warrant some attention in the space, dig in, do a little more work. Bank of New York is very much levered to interest rates, and if they're rising, that's a positive for the bank. BK, the ticker symbol there. Axos, don't know this one well. AX has a very bullish Chaikin Power Gauge rating, and UMB Financial Corp, ticker symbol UMBF, also has a very bullish rating. So these are 3 very bullish stocks in a sector that realistically from a trend perspective doesn't look great. An industry that doesn't look great. KBE, the ticker symbol for the ETF that we're using to track the big banks. Take a look at the ETF rating. It's bearish. Now the trend is above the trend line, so it gets strong here. The price is above the trend line rather. We are oversold. Money flow oscillating, but the relative strength is what does it for me. But the thing about this is it's a big group. It's fairly diverse, right? So I think if you want to take a look, if you're playing for rising rates, you need to take a look at, or a curve steepener. You need to take a look at each name on an individual basis because the group has been lagging since January and continues to lag with the intensity of underperformance actually picking up of late. So it's hard to get excited on the group as a whole. If you want to dig in on selective names, I think it makes sense. Probably warrants a little bit of extra attention with a focus on the names that are levered to higher rates. It's easy to say higher rates are good for the banks as a group. And while broadly that's true, realistically, each company is impacted differently based on their exposures. So it makes a ton of sense to do some digging there and do some extra reading as far as I'm concerned, if you're looking for ideas within the bank space, especially in light of the fact that this trend, we're not even back above the June highs, right? S&P 500 trading way up here, banks trading below the June levels. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, and to be honest, the majority of this leaderboard is Abbott related. Okay, Abbott got approval for their rapid diagnostic test for COVID yesterday. That was the big news in the market. And it rippled in both directions in a big way across the market, right? So Live Nation, LYV, up 8.75%. Nothing company specific there, but some thoughts that between the testing news that we had yesterday, the treatment and vaccine news that we had earlier in the week, all of a sudden, people start to think about these reopening type plays. LYV one of them. There's Abbott. They were the news source, up 7.85%. Royal Caribbean Cruise Line, obviously a positive impact there if it's on a read-through basis, up 6%. Norwegian Cruise Line up nearly 6%, same story. And United Airlines up 5.75%, all factored into the same mix. The loser side of the board, Dollar Tree, that is company specific. They had an earnings report yesterday, stock down 7.21%. After that, DGX, Hologic, and PerkinElmer, PKI, negatively impacted as the other diagnostic stocks were hit after Abbott receives approval for their rapid diagnostic tests. So DGX down 7%, Hologic down 6.6%, PerkinElmer, PKI down 4%. eBay didn't see anything company specific to drive that stock lower by 3.88% on the day. So let's talk about the charts. It's Friday. We look at the big picture themes and relationships in the market and what they could mean going forward. Here's one that has our attention, right? So there are things that have our attention within the context of this uptrend in equities. We've talked about narrowing breadth. We've talked about overly bullish sentiment. And now we have the semis here under some relative pressure. Now, the trend is still up. Don't get me wrong. We're above the rising 200-day moving average, right? The trend longer term is still up. But we do see some near-term weakness that, for those of you who read my note every Friday, we've been talking about that negative divergence between this ratio and RSI. You can see it in the middle of the chart here as the RSI has put in a series of lower highs and did not confirm the high in this ratio, right? High, lower high, 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 lower high, divergence starting to break down. We want to see the 40 level hold on the RSI, and we want to see a quick recovery in this ratio. If you look at semis on an absolute basis, they're trading near all-time highs. It's the relative that has my attention in the near term here. So it's something we're paying close attention to. Likely going to start, it makes sense in my opinion, to drill down on individual names, see if you're starting to see some breakdowns, or is it simply just consolidation within the context of uptrends. But it has our attention. It's always important to be mindful of where the traps lie. And this week, I think I've done a good job of laying out the things that we're paying attention to. What does that mean? That means you're more selective with your ideas and your risk management process is firmly in place and followed. Growth over value is that enduring theme that we've loved so much. Remember that a lot of people were talking about the big rotation away from growth and into value. Here's that rotation, folks. Here it is. This is the rotation that everybody was getting excited about. If you recall, we remained steadfast in our view. We said it was simply a matter of growth over value becoming extended in the near term and just likely due for a pause. But the data points that we look at, the cross asset class work that we do, pointed to this only being a consolidation. And that largely played out over the past 2 weeks as growth has reasserted its leadership position over value. Now, what I will say is that it's once again extended and that there is this small divergence here again as new high, not confirmed. Still in a bullish regime, but something we're paying attention to. And it's playing out as the cues have broken topside relative to SPY. So our bullish thesis on the market has played out. Drilling down below the surface, the bullish thesis plays out with a focus on growth, with a focus on the leading areas of the market. So we continue with our view, but are mindful of what's taking place under the surface. And then I will leave you with high yield versus treasuries back to the 200-day moving average. And this is a good risk barometer in the marketplace. You can see below the 200-day, but back at it, below the breakout level, potential shift in the RSI playing out. And this is largely playing out as yields have backed up. On the treasury side, take a look at the bottom of the chart. You have to squint to see it, but you're seeing a backup in yields with the 10-year at about 75 basis points. So one of the, just bringing it all together, the cross asset, it's things like this that we point to, risk on, whether or not it makes sense to be paying attention to financials, right? Cross asset class to build the mosaic on the market. and looking for potential inflection points. That'll wrap us. Have a great weekend. Take us for a test drive. I'm back with you Monday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.